Hey everyone, welcome to another episode of Investing Kev. I'm very happy that you all are joining me once again. In today's episode, I want to show you my process on how I approach a stock and whether or not I want to avoid it at all costs, put it on my watch list, or open up a position as soon as possible. I will be presenting some slides and will be using Tencent Music Entertainment, ticker TME, as my example. This channel is growing and we recently surpassed 200 subscribers, and I cannot thank you all enough for tuning in, sharing your thoughts, showing some love and support as it truly means a lot to me. If you like this content, please give it a thumbs up, subscribe, and let me know in the comments what you think. And if you want to reach out to me, I am active on Twitter at InvestingKev, so feel free to shoot me a tweet if you want to talk about stocks or anything else. Alright, let's get started. One of the biggest mistakes throughout my investing journey was buying stocks that I had no clue what they were about. I lost a lot of money years ago doing this when I just went with what the internet told me without doing my own research. The number one thing I always tell people is that you have to understand what you're invested in. It can't just be a very surface level description either. You need to truly understand this company as the time goes on. You need to ask yourself, if someone asked you to explain this company, could you provide a near fluent answer on what this company is, what products and services it offers, where it operates, who it targets, how they generate revenue, potential catalysts, and potential risk factors? As an investor, you want high conviction in your investments. You want to be as objective as possible and grounded through the good times and the bad times. You need to question your own logic, find flaws, so you can come to the best decision possible when opening a position or doubling down on a current one. You're not going to know everything at once, but you need to make that effort to understand this company as much as possible. I always go to the investor relations page of any company. There will always be an About Me section that I read up on just to get a basic idea of what this company is about. For our example, Tencent Music Entertainment Group is the leading online music and audio entertainment platform in China, operating the country's highly popular and innovative music apps QQ Music, Kugo Music, Kuwo Music, and WeSing. Their platform comprises online music, online audio, online karaoke, music-centric live streaming, and online concert services. They have built their platform not just as a music streaming service provider, but a broad community for music fans to discover, listen, sing, watch, perform, and socialize around music. On their platform, they have social interactions such as sharing, liking, commenting, following, and virtual gifting. These are deeply integrated into their products and highly complementary to the core music experience as they offer to their users, further enhancing their engagement and retention. As a result, their platform is an all in one music and audio entertainment destination that allows users to seamlessly engage with music in a high social setting. Their mission is to use technology to elevate the role of music in people's lives by enabling them to create, enjoy, share, and interact with music and thereby create significant value across the industry. The second question is, what is the future outlook of this company? What are the catalysts for growth? Whenever I look at the future of the company, I need to look at the macro level and see what the future of that industry is going to be. For Tencent Music, I typed music entertainment industry future growth. If I want to find an article that I'm guessing CNBC or Bloomberg has written about in the past, I'll append that to the end of my search term. I always try to find as many different sources as possible. These analyst future projections are all subjective, with most of the time they're roughly around the same ballpark. This CNBC article was released back in May 2020. It states, over the longer term, analysts at the bank expected a strong rebound, citing the secular growth of paid streaming, growing demand for music content and live events, new licensing opportunities, and positive regulatory developments. As a result, global music revenues were projected to reach 142 billion by the end of the decade, reflecting an 84% increase when compared to the 2019 level of 77 billion dollars. The bank estimated the online streaming market could grow to capture 1.2 billion users by 2030. To be sure, that's almost 4 times higher than the 2019 level of 341 million paid subscribers. The streaming platforms also stand to benefit from the rising adoption of music streaming and their vast amount of consumer data, although competition will likely intensify. We prefer leading scale players such as Spotify and Tencent Music, they said. I also want to take a look at this research paper that came out back in October 2020 from Grandview Research. They currently say that the 2020 market size value of music streaming is $24.4 billion. The revenue forecast in 2027 is projected to be 76.9 billion US dollars. That is a compound annual growth rate of 17.8% from 2020 to 2027. And the key companies profiled included Apple, Amazon, Google, Pandora, SoundCloud, Tencent Music, and Spotify. This is a graph from May 2021, which includes the number of monthly active users of the leading music streaming apps in China. As you can see, the top three are clearly dominated by Tencent. You have Kugo Music, which has 298 million people, QQ Music, which is 259 million people, and Kuwo Player, which is 132.7 million people. When I total up those numbers, I get a total of 690 million people who are on the Tencent Music Entertainment platform. That is really impressive in my opinion. So I go back to the second question, what is the future outlook of this company? Well, the industry is trending up year over year, and it's going to be a massive industry by 2030. What are the catalysts for growth? Well, These companies are trying to drive more paid subscribers, trying to offer more technology and new features to draw people in. And do I believe this company can build a strong moat even with tough competition? As we just saw, Tencent Music has over 690 million people on their platform. With China having a population of 1.4 billion people, it is really impressive to see Tencent Music pretty much have 50% of the market share. The third question that I ask myself is, how does this company make money? What are the revenues, and are the revenues trending up? Looking at their annual report, they have a revenue recognition section. It states that Tencent Music generates revenues primarily from provision of music entertainment services, such as paid music, virtual gift sales and content sub-licensing, and online advertising. Their online music services revenue comes from subscriptions, sale of digital music singles and albums, content sub-licensing, and online advertising on the group's online music platforms. And looking at the revenue from social entertainment services and others, Tencent Music offers virtual gifts to users for free or sell virtual gifts to users on the group's online karaoke and live streaming platforms. The virtual gifts are sold to users at different specified prices as predetermined by Tencent Music. And they also generate revenue from online karaoke and live streaming services by selling premium memberships that provide paying users with certain privileges. As you can see from 2018 to 2020, they've seen an increase in the revenues. In 2018, they had 18.9 billion renminbi, and in 2020, they had 29.1 billion renminbi. And you can see that this is a profitable company. As you see from the profit for the year, in 2018, they had 1.8 billion renminbi in profits, and in 2020, they had 4.1 billion renminbi in profits. From what I see, this looks like a really healthy company financially, and in 2020, especially with COVID, I feel like that definitely helped Tencent Music grow their revenues. Overall, the revenues are trending up, which is nice to see. Even if they have a bad quarter, I want to see the line trending up year over year. As long as the company isn't stagnant and is trending up, then that's what matters to me. I want to take a look at their second quarter highlights, which ended on June 30th, 2021. Their total revenues were 8.01 billion renminbi, which is 1.24 billion US dollars, representing an increase of 15.5% year over year. Their online music service revenues grew by 32.8% year over year. Their revenues from music subscriptions were representing a 36.3% year over year growth, and they had 66.2 million online music paying users, which is an increase of 40.6% year over year. Looking at the fourth question, what are the risk factors this company may face? For example, if this company paid a dividend and another pandemic happened, will this company likely cut its dividend? I'm aware that Tencent is in China, and if you're not aware, data and privacy laws have been heavily regulated this year in China. Tencent was also ordered to give up their exclusive music licensing rights. This happened because Tencent was participating in anti-competitive behavior. The competition watchdog ordered Tencent and its affiliates to relinquish exclusive music rights within 30 days, and to end requirements for copyright holders to grant the company better treatment than to its competitors. And in response, Tencent said in a statement that it will comply with all the regulatory requirements, fulfill their social responsibilities, and contribute to healthy competition in the market. As a rule of thumb, if you're going to invest in a foreign stock, it would make sense for you to understand the country a little bit. You don't have to be an expert, but reading up on the government goals and what they're trying to strive for, you'll have a better understanding. I always say this in all my stock analysis videos that the government is the number one risk factor out there no matter what stock you're talking about. They can either help you out or they can break you. Tencent has repeatedly stated that they are going to comply with everything that the Chinese government has set out for them. Competition will always be a risk factor. Earlier, when I saw that Statista graph, they had 690 million users, but that wasn't including the entire Tencent Music ecosystem. In this Statista data from August, there are 832 million monthly active Tencent Music users. I know competition will pick up, but right now Tencent Music has a dominant position in the market and that allows them a lot more flexibility compared to their competitors. The fifth question that I ask myself is, do I believe in the company's leadership team? When I look at the leadership section, I see a common theme. A lot of these people were part of Tencent for over 10 years and have a strong knowledge of the company. You can see the chairman has been at Tencent since 2008. You can see the CEO has been there since 2003. You can see the chief financial officer working in the Tencent ecosystem since 2007. These people have grown through the ranks, and that is really important to me. Stability is a huge thing, and I believe the results have reflected in this company. This company has grown massively. They have over 832 million monthly active users, and they offer apps that stand above the rest. And of course, they are finding ways to increase their revenues and grow. There will be times you come across a stock where people talk badly about the management. It really doesn't matter what company either. There are definitely a few legacy companies that were ran poorly and are ran poorly currently today. That is up to you to figure out what your risk tolerance is and if you think the management can improve or if they're doomed to fail. Looking at number six, how long do I want to hold this stock for? What is my time horizon? Well, for me personally, I am a long term investor. Through the ups and downs, I rarely ever sell unless I need to rebalance my portfolio. Right now, from what I see financially from this company and leadership wise, I'm very intrigued by this company. I am in this for the long term, but if you're a short term trader, this may not be the company that you want to invest in. If there is a market crash in 2022, I'm pretty confident that this stock will not grow in price much. What I see though is the future of the music entertainment industry in the next 5 to 10 years. That is what excites me. This stock was over $30 earlier this year. Obviously, past performance is not indicative of the future. Year to date, they are down 59.42%, which is $11.51. I personally think that this stock is fairly undervalued compared to the fundamentals we saw and the massive number of their user base, which was 832 million people. As of right now, I would consider Tencent Music Entertainment to be a deep value play. And of course, for full disclosure, always do your own research. I'm not a financial advisor. This is just for entertainment purposes only. And finally, do you have conviction in what you invest in? Do you have conviction in buying, owning, and tracking the stock long term? Are you buying just because someone told you, or have you researched well enough to form an opinion and come to your own conclusion? Are you okay with the risk factors? Do you think the benefits outweigh those risks? Is this a stock you're excited to track over time? Overall, going through all of this, I do have interest in Tencent Music, and the stock is definitely on my watch list. As of right now, it's been on my mind of adding 5 new Chinese stocks that are under $10 that I don't own, and Tencent Music would be one of those 5. I haven't pulled the trigger yet because it doesn't align with my goals right now, but the stock is definitely high on the list. I use this checklist for my own personal process because a lot of great companies have similar traits. They have a vision, they generate revenues, they adapt with the times, they have strong leadership, and these companies can weather temporary pains only to come back stronger even when things are really competitive. Other people have more or less questions on how they evaluate a company, and that is absolutely okay. This is all subjective, and I hope someday you find the right questions to ask yourself when you come across a company. Let me know what you think about this. Do you have any other questions you ask yourself? If so, if you can share that with the community in the comment section below so we can all learn together, that'd be amazing. Thank you once again for joining me on this video. If you liked it, please give a thumbs up and subscribe. As always, thank you for tuning in, stay safe, and I'll see you all next time.